All right. As you guys overheard me talking to Milena, I said that we're gonna go over the difference between low resistance liquidity and high resistance liquidity, and that helps you get context to your trading. So I just want to start off by just giving an example. Let's just go right here. Okay, so low resistance liquidity sounds fancy, but it's basically if you guys already trade, let's say patterns, or you guys trade like trend lines, then you get your low resistance liquidity through the sequences of lower highs and lower lows. So we have lower highs. This is creating low resistance liquidity. And typically what happens with low resistance liquidity is that it's um it moves a lot faster. So when price starts moving in its favor, you'll start seeing price um be executed quickly and reach its target quickly. And the opposite is for high resistance liquidity. So the difference between low resistance liquidity is where we are creating structure and making highs, but we're failing to make new highs. So, or the vice versa, we're failing to make new lows. So when we are creating all these lows, these are just being left, and eventually price likes to come down and take out um these swing lows, swing highs. So when you have a bunch loaded up, right, when price drops, it drops quickly in order to take out its target. So we have liquidity right here, for example, the swing low, we move quickly to take it out. So that gives us a target for where we expect price to go. And once price gets there, that's where you want to exit your positions. Or, if you have runners, you want to find the next liquidity to go for. So for example, like right here. So we just target these pivot lows and these pivot highs. So in other words, low resistance liquidity is like a trend line break. If you trade patterns, it's like a bear flag, and it moves quickly. But in order for it to move in your favor, it needs to create high resistance liquidity. So now going over high resistance liquidity, this is an example of one, right? It's when we're making lows, the high resistance liquidity is the opposite. So when we finally make a higher high, but this is also known as, because we are in a downtrend, right? If you guys are learning some of the vocabulary with ICT, we would get this is a daily market structure shift where we create new lows after making new highs. So we are initiating a downtrend. So we're initiating a downtrend. What we would want to look for in order to get to your targets, once we establish that we're in a downtrend, is you want to have a high resistance liquidity, which is the opposite, right? Where we make a higher high, which is also a liquidity sweep. Then that would you would see price quickly move in its favor to target sell side liquidity down here. Okay, so high resistance liquidity is when we have basically the opposite. It's going the opposite direction, and we're looking for that to get us into our positions. You don't want to be chasing price down here. You want to get chase price up here. So for example, if we see a high and then we make this new low, oops, right? We don't want to get short down here. We want price to return to discount 50% of this range. So once price ends, and since we broke structure and with closing candles, we're not chasing shorts. We're waiting for price to come up here. So instead of going long right here, we're waiting for price to get into discounts because we know where we initiated a downtrend. So this is where you want to be going short, right? Same as right here, right? We go further down, right? We don't want to get short here. We missed the play. We want price to return. And once we get um a high resistance liquidity, then this is where you want to be entering. This is where you want to be entering your positions for shorts. So let's try to give some replay examples so it makes a little bit more sense. So right here, right, we see that we are in an uptrend or a downtrend, right? This is a downtrend because we're making lower highs and lower lows, and we have targets below. So what do we do? In this case, right, this is why once we establish all these things, are we low resistance? We're creating low resistance structure, right? And we're targeting sell side. So this is where you want to start. You know, if you have indicators, you can look to double check your work. You want to look at the indicators without establishing which direction we're going first. So looking at this, we have the RSI right here, for example, is a little bit near the bottom oversold. So what we want to do is, like, we don't want to just get short. We want to look for an opportunity to get short. So let's let this play out a little bit, right? We see price coming back up. And this is where you want to start looking for opportunities to go short. So there's what, a fair value gap, there's some resistance, and it's respecting it, right? So let's just see where price decides to go. We respect the bearish fair value gap. And now we get a high resistance liquidity, right? This is high resistance liquidity because it's it's going up, right? And we want price to go down. And we're leaving low resistance liquidity below. So let's just see what happens. Oops. Okay. So now, actually, right. So now, once we see this position, that's why a lot of times with trading, it requires you to wait. So if you're looking at this structure here, now you can engage in the trade, right? So now we establish that, hey, we are respecting bearish fair value gaps, right? Price moves in three ways, right? It moves towards liquidity, which is here. It moves to rebalance to equilibrium. So we had a price coming from here to here. Price moves towards, oops. Price moves towards liquidity. Price moves to rebalance to equilibrium, and price moves towards inefficiencies. So inefficiencies are, in other words, fair value gaps. So when you see fair value gaps being respected, then it's the trend of which it's being respected is more valid. Okay, so again, liquidity, rebalance to equilibrium. So if you are if you're attacking this angle right here, right? If price came down and it never reached equilibrium for you right here, then this is where you won't enter. You want to enter once it gets back to 50%, which is discount. In other words, so you're not chasing a play. So it requires a lot of patience and you need rules of engagement. So for this situation here, now I have a higher conviction that we are going to target these lows. So let's look for, all right, we have this low right here, and then we had this low right here. So let's just put that just in case. But because we have swept liquidity, then we can start looking for trades. And this is on the daily chart. This works, it's fractal. So this works on the 5 minutes, the 15 minutes. It's the same concept. So you need certain things to happen in order for price to move in the direction that you want. So by looking at this, we, just like I said earlier, low resistance liquidity, once it starts being triggered, we have liquidity sweep. And it tends to move a lot quicker in the direction, right? So we got another one right here. Boom. I would probably look to enter shorts here, right? And target liquidity, right? So we had this liquidity right here. Price likes to gravitate towards swing lows. And this is another target you could have had if you were in a position right here. I would target swing lows here. All right. Now we can look at the RSI. We are perfect for coming up, but let's see what happens, because I won't enter a trade. So sometimes when when you see something like this, you would enter it right away. What I like to do is I like to sit on it, and then I like to wait for structure to be built. Just like this right here, right? We have structure being built. So we have new high, new high. Right now, we don't have any new high right here. So I want to see a new high be built right here. So, okay. We had another sweep. So I will start looking for longs if we can really break above here. Okay, we get a break above here. Still not entering longs yet, but if I do enter longs, where is my target? My target is low resistance liquidity. We have low resistance liquidity, right? So, and this is high resistance liquidity. There's a higher chance that we're not going to come back down here, right? Because we've already swept, which is going the opposite way. If it was like this, that's low resistance liquidity. This is high resistance liquidity. So if you guys trade patterns, what does this look like? Right? Is this a bullish play or a bearish play? All right, this is looking more bullish. Okay, this is like a falling wedge or whatever, right? Where we have liquidity sweep down here, another sweep down here. So I will start looking because this is a low resistance liquidity and because all sell side has been met. Now I'm looking to target the high side. So let's see. What I would like to do is I would like to wait for a fair value gap. So right here, there's the tiny one right here, but this is not good enough. I want to see a bigger fair value gap for me to start engaging in a trade. Okay, another high resistance liquidity. And boom, right? So this is a fair value gap that I like. We have an inefficiency right here. And like I said earlier, price likes to move towards liquidity. Price likes to move towards rebalancing to equilibrium. And price likes to move towards inefficiency, right? So those are three key rules that I look for in entering my trade. And since we have a fair value gap right here, this is where I start looking for trades. So this is an order block as well. So because we had a last down closed candle create fair value gap breaking structure. So this is an order block and also a fair value gap. So you could trade either the fair value gap or you could trade the order block. So, but means that when we're creating this, that means that we are creating a bullish trend. And just like right here, this is a bearish trend. If price comes down and respects this, then I know we're in a bullish trend. But I need this to happen first in order to confirm it. I can't just enter down here off of a sweep. That's not good enough, right? I need displacement up and a retest. And that gives you a higher probability understanding the other rules that we're talking about. Because like again, we left a lot of low resistance liquidity and we only want to go for low resistance liquidity. Okay. So let me just label this bullish for value gap. Okay, so let's see what happens. Now that we got what we wanted, we broke structure, we displaced. So let's see what. Okay, so this is an example of a retest on a fair value gap, but to be safer, sometimes I just do the order block. So price comes up, comes down, and this is where I like to enter, right? Because we created a high resistance liquidity right here. However, all the objectives were met down here. So this is usually where I would like to look for long opportunities because price came down and retested, right? Equilibrium, right? It retested equilibrium. Like I said earlier, I would like to see price come back down to equilibrium, which is 50%, which is in a order block, which is also in a fair value gap. So this is a higher probability because if I were to enter a trade, like right here, that would give me leaving a clear stop loss below either this candle that started the fair value gap or slightly lower. So let's just put it right here. And I would target this one first. And eventually I would target this one second because we're looking for liquidity now, low resistance liquidity. All right. So let's see what happens. Hopefully I don't get stopped out right here. All right. So that's target one met because it fit our criteria, right? Of the rules that I explained to you guys in the beginning. That was a nice little entry, right? We go for price rebalancing because we are not chasing, right? Let's say, for example, you entered the trade on the breakout, right? We saw a trend line break and I entered a trade. Where are you going to put your stop loss? You would put your stop loss, right? Like probably not too far away because it's a lot of points, right? From right here, 91 to 93, that's 10 points on ES. That's a lot, right? So you want to have the most discounted price because right here to here, this would be your target. It's less than a 1-to-1 ratio after if you just play a trend line break. So since knowing that price likes to rebalance the equilibrium after we had this rejection, knowing that price likes to balance the inefficiency, and knowing price at equilibrium is a discount, then this would be a higher probability trade. And that's how that like right here, like I said, is how you are able to stay in your trades without being in such of a big drawdown. So there's a slight drawdown here, and first target is always like the first swing low right here. This is a good couple points, and then the next one would be right here. Okay, so let's leave it right here. Let's see what happens because we are now establishing we're in an uptrend, right? Let's see what happens. Price came right back down to the order block. We're sideways for a long time, huh? And bam, right to equilibrium. I mean to inefficiency. So we bounced to inefficiency down here, and now we hit inefficiency up here. Okay. So knowing that, right? Now we established that we're in an uptrend. Like I said, this also works like on the 5 minutes, the 15 minutes, right? The hourly. This works. This is the daily chart right here, but it works. The objective is the same. We look for low resistance liquidity after a high resistance liquidity. Oh, excuse me 1 second. Hello, Moody. Hey man, yeah, I'm in a class right now. Okay, all right. Okay. Sorry, that was Moody. Yeah, so knowing this, right? Do we still have low resistance liquidity above? Yes, right. Not all objectives were met, just like all objectives were met here. We had this whole structure. This was the last low, and it was really met. So in reality, this is the one that you want to go for. And once this is met, we had another sweep right here. Sweep, right? So the sweep is what engages you into the trade. The sweep right here is what engages you in the trade. So once you see the sweep, and we make new highs. This is the high, making new high. Then now you're looking to take out all this over here. So the next target is where? The next target would probably be right here. And this is where I would exit some of my position. So let's see. As price goes towards that direction. And it moves quickly, right? So once we establish that we're in this trend, price moves quickly towards liquidity. And this is where you put your limit sell. Because a lot of times if you just get greedy, it's gonna hit it and then it reject. Especially if we're running for a long time, right? Okay, here's another one and last one right here. And this is called internal liquidity. This is internal and this is the external. So establish that if we have been trading for a long time, then you want to start exiting at internal liquidity, shaving off at internal liquidity and leaving your last one for the external because there's no guarantee that we're going to get all the way up here. And there's also a risk of SMT divergence, which I'll show you guys in a second. Okay, so you see how this was that last internal liquidity? Then what does price do? Price likes to rebalance towards equilibrium from the swing low, and it likes to rebalance towards inefficiencies, such as these fair value gaps right here. These are fair value gaps. This is fair value gap, and price likes to rebalance towards them, especially if we've been running for a long time. That's why it's important to know that when people talk about time and price, um, if we've been running this much and all of a sudden you go long, you get calls and it goes against you, you got to understand that price needs to rebalance the inefficiencies. So if you miss the boat, you got to wait for it to come down to one of these inefficiencies to enter. You can't just chase it because you're going to be in a drawdown. Okay. So after we hit that target right here, a lot of people exit their positions, but that does not mean that now all of a sudden we're in a downtrend, right? We're just creating high resistance liquidity. So that's why once a big move like this happens, it's important to wait for structure. So let's see what happens. I think we probably go a little bit lower to right here. So again, as this is happening, it is creating like low resistance, high resistance, low resistance, high resistance. And that's what's considered choppy, right? Low resistance right here. We have low resistance, and then it quickly moves down, which are trend line breaks. And then high resistance is the opposite, right? High resistance liquidity. There's a less chance of it going up when it keeps making higher highs, higher highs. So this is a rising wedge, which is a bearish pattern, right? So yeah, high resistance liquidity and low resistance liquidity. Okay, so let's see. I think we are just rebalancing right here. Let's see what happens after we swap, after the internal objective is met. But again, the goal is for it to get here. So that's why don't just go short because the goal hasn't been met yet. Okay, so let's wait for price to create an engagement. So this is high resistance liquidity, high resistance liquidity. So now all we're doing is waiting for the shift up. Okay. There we go. We get that shift up. So what does that leave? We left a lot of low resistance liquidity, right? High resistance liquidity. We're being swept, swept, swept. So now if price does move in our favor, it should move relatively quickly. So let's see what happens. You see, we waited for displacement. We want these big candles to get us making new highs, okay? And once we get that, the trend line is more valid once we sweep liquidity. We have a sweep of liquidity here, which is high resistance, high resistance. So this trend line is more valid and it should take us to our target quickly. You see that? All right, and this is very similar to the trade that I was posting in my channels this week. So this is just looking at a little back testing of what happens and how to what to look for in when you're trying to create your bias for the day. So let's go into more present day. Yeah, I'm in the middle of something. I'm in the middle of something. Oh, excuse me. All right, sorry about that. All right, so let's go move on to current week. So this is what happened. We've been running, right? We've just been running and running after we made this new high. We've been running. So there's really, I mean, unless you go into smaller time frames, we have really no other targets to hit up here, right? We don't have any other targets. So what we have to do is wait for structure. So if you're not in a trade or you can play smaller time frame trades, but it's hard to create a daily bias. But for the first time this week, we actually created a new lower low, right? Every time is we're making higher lows, higher lows, higher lows. So this is a lot of low resistance liquidity. So if prices were to break down below this structure right here with creating a fair value gap, then we should dump pretty quickly, right? Rebalancing to inefficiencies, rebalancing to equilibrium. So let's say, for example, let's just try to, from this is the last swing low before we made a new high, maybe right here. So I'll go here to here. So if we rip down below here, then price should drop pretty quickly to either equilibrium, which is and a fair value gap. So we have inefficiency here. We have a 50% right here. Right. So if we do break below here, I could see us dropping pretty quickly because just like we've been doing over here, right? Low resistance liquidity leads to quick movement, and we have low resistance liquidity, right? And if we do break below this low, we had to create a fair value gap. That's the rules for my trading strategy, fair value gap. Then I would look for us to push down. But zooming in though, right? This is like weeklies. Zooming in, this is the first time I saw a market structure shift. Let's just go to the 4 hour. Like I said, time is fractal, so they all work the same with the same, right? With the same rules. Okay, we had a sweep right here of the highs, which is also right high resistance liquidity because we made a new high. So there's high resistance liquidity and low resistance liquidity, right here. So we're breaking down. So once we made this first move like this, I put on the Discord that I want to see us come down and take out some of these lows. So I think we had equal lows right here that were never touched. So we came right here. So let's move to the hourly so I can see more candles. So we have equal lows here. Price likes to move towards liquidity. And if you have equal lows right here, especially if you look at it really closely, they really, you know, these equal lows, they're just left out here for price to come return to. Okay. So we have equal lows right here. We had a market structure shift right here. We have high resistance liquidity up here. And we created a fair value gap. So what did I say I look for price to do? I like price to come back to discount, 50%, back to fair value gap, right? This is where you would enter longs or shorts, enter shorts because we broke structure. So I like to wait for price to return. But I also took a long too because I knew price was supposed to come back up. So I took a long here to the inefficiency, and then I took a short from the inefficiency coming down. Okay, so we have just like we did down there, right? We want to come back to the fair value gap, or at least 50%. And we just had the displacement that I look for longs. I like to look for displacement, fair value gap. This is where I go long. But I know that this is a scalp because on a bigger time frame, we're going short. And once we had this right here, right, I got out. I got out. Let's see. Let me try to, I think I showed it on my Discord. So let me switch to the Discord screen. Give me 1 second. All right, y'all see this? Okay. So I traded the micros right here to take us long. So we had that fair value gap. This is NQ though. ES and NQ usually move the same if it's a trending market. So we came up to here and then I saw us having trouble right here and I was like, uh-oh. So I moved my stop loss all the way to right here, this fair value gap, because I knew price likes to come back to the fair value gap. And if we come further down, then I don't want to be a part of it. So I put that there. And I also bought I saw this, which is the divergence I was telling you about. We had a high resistance liquidity right here, and we had low resistance liquidity for NQ. But once that we have a high resistance on ES, then I knew that all of our targets were met because on ES we had that fair value gap I was talking about. So once we had this, I was like, oh shoot. So I switched, I sold my NQ, right? The one I had up here. I sold this, right? Moved this up, sold it. And then I got this. And just like I said earlier, once we get the liquidity sweep, high resistance liquidity into inefficiency, and we leave a lot of liquidity below, price likes to move quickly. I didn't know it was going to move this quick, but you see how price immediately shot down. This is just one micro. I was like, I was driving. So I only bought one micro, but you see how quickly it came down, right? And just like I said on the thing, I want price to come back down, hit the fair value gap, sweep liquidity because we are now in a downtrend because all objectives were met um, on the bigger time frame. Okay, so let me switch back to the other. Let me see in the chat. Actually, I haven't seen anybody in the chat. Okay. Hello, hello. All right. But yeah, does anybody have any questions? All right. Right now, we did leave a lot of liquidity down here going into next week. We did leave a lot of liquidity down here. Right? That was not low resistance. Hasn't been touched, hasn't been touched. So this would be my target. But right now I need more structure, right? I need more structure. There's not enough fair value gaps right here for me to enter. And matter of fact, we're actually in the middle of a bearish fair value gap right here. So I'm not touching anything until we either break out here because we have these targets to go for, or we're just building structure and then coming down, taking this out before moving up. So we have inefficiency down here. I think that I got that on the daily. Yeah, there's daily inefficiency, like I said earlier. So I think that if we fail to break up higher, I think we're going to come down lower. And this is ES, so it's the same as this is SPX, which looks the same, and it's the same as SPY. All right. I have not touched SPY in a minute. So for SPY, it's a little bit different targets because not only are you sweeping liquidity, there's a gap to be filled right here at 509. Right now it's 516. So we're inside day. If we continue to push further down, we have some selling. I would expect this to come down like $8. And then there's another gap to be filled right here at 499. So is there any questions? Shoot, I don't have where do you think NQ is gonna go next week? What's the same, right? Let's see, NQ. NQ is there. Yeah, see, I kind of need a little bit more. It looks like we're building low resistance liquidity above, but we have equal lows down here. So I think we might come. What I would like to see in order for us to go higher is that I want to see us come down and take these lows out and then go higher. So, um, like maybe
So
come
on
down.
the weekly, so if you look at the weekly for NQ, what I saw that when we did that evening star, we basically stayed above the 618. So because of that, I'm thinking, okay, are we still bullish? Because I didn't have a clean candle close below the discount zone, the equilibrium.
Well, if you look at this is this is
Yes,
still
it's
like there's a lot of buyers stepping up, right? And then there's was this a 212?
and it's still an inside bar. Yeah.
Well, it's not inside. This one's
Oh,
outside.
oh, I shouldn't say.
Two. This
Sorry,
is two
it's an
down.
inside from the green bar. I
Yeah.
apologize.
Yeah, that's why this is we're actually in like a really tough spot. You see the RSI, like we are way overbought and for a long time. And this is we're getting back-to-back red weeks, back-to-back red weeks. So I don't have a clear picture yet. But that's why you want to make sure you have targets. So right now we did sweep right here, right? We swept buy side external. So we still have a lot of liquidity to take out below. So I want to see us come down a little bit. And because we have an inefficiency right here too. And like I said, price likes to go to inefficiency. So, and there's low resistance liquidity. So I think we're going to come down here, at least dance a little bit, either bounce, but I think we should come down, touch these levels. So that's like what, 500 points, maybe 300 points minimum. And inefficiencies right here, right? 319 or 1719, 918, right? So that's why you have to wait for structure and you have to wait for it to be clear. Right now, this looks like a cup and handle. This looks like, but there's nothing really for me. I need a fair value gap up, and there's zero fair value gaps up. There's only fair value gaps down. Gap, gap. So it could just shoot up, and that's why you have to be okay with just like, if you don't see your setup, then you just don't trade it. For me, it's clear when I get a fair value gap pushing up and for price to come right back down to inefficiency for me to get in. So if you have those rules set, you create these rules by understanding time and price, by understanding liquidity, then you can really create a strategy around those rules. And some people would do it through patterns. Some people would do it through RSI being overextended. It's really up to you, but I think you need a foundation understanding the bigger time frames and where your targets are. So right now, I think we have inefficiency below. We have equal lows below. So if we do push up, I'm not bullish until we really rip above this high. All right, because we could do the same thing as we did right here, right? We had this high right here, and we made a new high, and then we dumped. So we could make this new high right here and then dump. So it's not clear. Right here is a little bit more clear, right? Because we have trend line break, right? And then we had equal lows to target. Right now, we just had straight down and straight up. So I don't trust this. I want to see us kind of build more structure here. Maybe like create a little, um, you know, a little bit more of a wedge, you know? So I need more structure here in order to take me where I want to go. So that's why a lot of times Monday, if there's no news or whatever, then sometimes a lot of people don't even trade Mondays if there's no news or whatever. Just so we can let the first couple candles create the weekly candle, right? We have a weekly candle right here. And usually I like to mark out running out of time right here. Right here. This is where we open, right? So this is the weekly. Oops, I actually have this right here. So this is the weekly. This is where we opened. So anything below this, if I'm bullish, then I'm looking for bounces to get us to turn this into a green candle. But this candle actually closed red on Sunday or Friday. So the next on Monday, whenever this opens in a couple hours, I'll put this there and then I'll see if we push above or below it. That'll let us know if it's a green candle or a red candle for the week. So this is where we opened. We opened green and then we turned red. So we ended the week below where we opened. So I'm not gonna be bullish until I figure out where we open. But yeah, so that's what I got so far for you guys today. Hopefully it made sense. You guys have any questions? Feel free to unmute yourselves. I think I have 3 minutes on the Zoom left. Are you guys good? Bang, bang.
Yeah, I think I just let some of it suck in a little bit. I might have some questions for you later.
Okay. Did it make sense though? You guys find it a little bit easy to follow? I try to make it as simple as possible. Low resistance that moves quick. High resistance is where it goes the opposite way.
Yeah, definitely.
Okay, cool, cool, cool. And I wait for, yeah, price, just to debrief, price moves towards liquidity, price moves to rebalance to equilibrium 50% of the highs and lows, or price moves towards fair value gaps. So that's why when price displaces, creates fair value gaps, I look for price to rebalance to enter. So it's basically the break and retest, higher probability, lower of a spread of, the drawdown you'll be in. And if it goes against you, it's tighter than if you're chasing. Okay. But yeah, I'll post this recording. I'll post this recording on the Discord. But if there's no other questions, I hope you guys have a good day.
Thanks, man. Appreciate it.
Yep, of course.